At first blush, the bank's interim results seemed pretty good, with the Big Four's profitability up 7% to $12 billion. But those figures were helped by a decline in bad debts, while quality revenue growth and improved lending margins were hard to come by. In a moment, I'll talk to ANZ Chief Mike Smith about that struggle. But first, Neil Woolrich has a look at what we learnt this week.
Look, I'm certainly confident about Australia's economic growth outlook. I'm certainly backing Australia into the future.
In many respects, the economy probably couldn't withstand an interest rate rise just at the moment.
I think that the economy, as I say, is multi-speed right now, and I think it would be difficult to put a brake on.
It's a biannual ritual where the banks provide a deep scan of the internal workings behind their multi-billion-dollar profits. But the bank reporting season is much more than that. It also coughs up detailed results about the health of the broader economy. The prognosis this week was reasonably good, given the infirmity of other developed nations. But there were some troubling spots found which could turn rather nasty.
I really don't think there's anything to get particularly excited about in these results.
There's substantial concern, of course, over loan growth, in particular what might happen to residential lending. We've been waiting for some time for corporate lending to pick up.
After investors pored over pages of results and analysis, the National Australia Bank looked to be the preferred stock this week, with NAB's share price the only one to bounce on the release of its results.
The media is reporting that it's largely driven by the personal bank, whereas when you actually look at the numbers, it's largely coming through in the business bank, basically where repricing continues to drive the margin up, and they've had a very good cost outcome, and once again you've seen a much lower loan loss charge.
In the March quarter, their margin actually went up, notwithstanding the fact they had high levels of growth. Westpac had the lowest level of growth but the best margin outcome, but because the growth was low and they had very little in the way of trading gains, they seem to be the biggest loser in this most recent reporting period.
On the other hand, ANZ was buffeted by the high Australian dollar, which trimmed some of the profits from its Asian business. Another drag at home for all of the Big Four has been the tepid rates of growth in business lending, which is only now showing signs of recovering.
It's really been only 2 months, and it's been quite modest at this point. So I think we'd like to see more in a sustained way.